In Saturday's video, we were discussing how everyone was saying Black Monday, and we were saying the percentages are not with you on that one. And we even found some signals down here to produce some upside. So congratulations if you were able to take part in that. But there's something about this move right here that is 4% down, and you would expect, hey, okay, the implied volatility was shrinking. But on Friday, we have another monster to get through. We have a whole nother week's worth of implied volatility going into Friday. And so we got to pay attention for some more rip around behavior. It is one of the most important times in the history of the stock market to be paying close attention to your risk. And let's just get right into it. If you're part of Patreon or watched the video from yesterday, we were discussing how you kind of need to be this guy up here, right? Even though this guy, we were like this down here going, this is interesting. Everyone's saying crash, but we see a good signal outside of our 95% line in the sand down there. And then we see the big upward move, and we're pretty happy about it, but we were thinking, hey, this thing could squeeze further, but we know that this purple line means that is another decision-making area, and my goodness, aren't you glad that if you did make some decisions, taking profit towards these areas was something that we did discuss as a decision-making opportunity. But you gotta keep going with those decisions because we do have an extreme amount of implied volatility tomorrow. We did just put out the Patreon, right? On Patreon, we put out the daily expected moves for all the stocks that we do cover on this channel. We're gonna go through a bunch of those, but if you just screenshot kind of the right side of your screen as I scroll down, you can see a lot of the stocks that we do give those expected moves for, and those will really help you out going into an expiration if you have shorter time to expiration, right? So something I wanted to show you before we get into these big daily expected moves, I did make the second standard deviation expected move today. Didn't really distribute it out. I just wanted to see if we could get there. So I made it really quick on my phone, and 514.68 was that level. Look how we get to, again, another day, right? You are seeing back-to-back 1%, 1%, 1%, 1%, 1%. These are all 1% probable moves. You are seeing the craziest volatility, and nothing is really staying within those expected ranges. So be very cautious out there. It means you have to be super cautious in this environment. Maybe pull back on that position size. That's what I've overall done throughout this whole time in here. So something that we need to look at is, did we land back in that 95% zone? Yes, we did. We did go back up into that 95% zone, but there's always the opportunity to drop again. So we got a big range, bigger than yesterday, or bigger than technically yesterday, but we would say today, right? Friday has a bigger expected move for the day than, say, today being Thursday. And so we have to pay attention. That means it invites more rip around kind of behavior. Now, we have been talking about the potential for IVs to get crushed. And what that would mean is we don't see as volatile moves, but we did see another unexpected move today. So that makes sense that we are going to increase that. And that makes sense why this is at almost 70-something% for the SPY. It's very large. Even in bear market times, you do not necessarily see ranges this big, especially for the daily scale. You just don't. I've never seen ranges stay this big for this long. It seems like people are very uncertain and willing to keep ripping this market back and forth. And we potentially should expect more of that until we see some things kind of solidified, maybe on the China side towards tariffs, okay? Something to understand here. We did leave a gap behind. We have the top side level of 545.23 to the upside. We have the bottom side level of 503.93 to the downside. Remember that dotted line is our 95% line in the sand, saying there's a 95% chance that by the end of April, we're going to close above that line. Are we at the end of April? No. So let's talk about something to the downside first. One thing to be clear here is if the 2-hour does curl down into negative territory and we cut through these areas and we see something absolutely dramatic and take out these lows, we're starting to look like bear market behavior. So keep that in mind, because that still means you could get some kind of rally, but that rally could then fail. So if you want to see this market be able to get to all-time highs, you need to see some good news pretty quick. So something we'll pay attention to is the fact that, okay, 2-hour crosses down, that's bad. But what's happening right now? Well, the 30-minute is saying I'm in pullback mode, and we might be seeing some kind of little ABC type move like this right here to get down to that lower level about 503.93. I think testing this level of 502 would be fine. Cutting these lows, especially this wick, would not be fine. That would lean towards bear market at this point in my mind. So that's something we discussed during the live show this morning. I wanted to share it with you guys. As we look forward into this, what would be a great sign for this to head to the upside? Well, if that 30-minute can curl up into positive territory. Now, if that does that very early on in the day, just be aware that the most likely area to land by the end of the day tomorrow would be right in here, weirdly enough. It actually would be right in here towards this area inside the monthly, inside the weekly, and inside the daily expected move all at the same time. That'd be fantastic. But that doesn't happen a lot of the time, right? We notice that the monthly expected move still has plenty of time. So if the 30-minute crosses up and we see 30-minute divergence, that would like to curl down a 2-hour chart, and that is something risky that I would be aware of. What you're looking for here is for some good news to really project this higher. What we're looking for here is the market to be able to take back this level right here of about 550, and we've discussed that for a lot of time this week, especially when we actually started to see the upside move. We kept saying take back 550, take back 550, and ultimately the goal is to get all the way back up to 577 to 576. That would be a great sign for this market to be able to hold that strength and then turn down and maybe create some of that structure to head to the upside. So that would be very, very nice. So as it goes for tomorrow, it would be if the 30-minute crosses up, I'm looking for that 545.23 to the upside with the potential for a reversal signal, some kind of trap at the highs as volatility is extremely high and we are going into a weekend. Very scary time to be holding huge, huge, huge positions over a weekend when bad or good news could come out. A lot of people just discussing this online. I'm seeing this a lot. Everyone is saying holding stocks over the weekend is really risky because something bad could happen. Something bad could happen. Something bad could happen. Don't let your brain say that too many times because you're going to forget about the fact that it's just as likely that something good could happen, right? It is pretty much a coin toss when we're actually going to see some of this info be great news for, say, China or for the US for the US in relation to China and the tariffs. But it also, I want you to pay attention to the strength here. We have not given up that strength. If we give up all of that strength, if we go retest the breakout area, which is down in these areas, which I'm kind of leaning towards, I would rather see us start off the day heading to the downside, go down into that 502.27, somewhere in this area, retest the breakout area, and then see support come in. And if we can do all of that while remaining near the center line and we curl up, by the end of the day, we could land in these weekly expected moves, see this thing turning to the upside, land inside of our weekly expected moves, which is actually way bigger. Sorry, I have to draw it bigger. But we would land in the daily expected moves. We would land in the weekly expected moves. Something that would be really nice for tomorrow would be to land in your daily expected moves and your weekly expected moves. That gives the opportunity for the IV to come in a little bit, and we'll see if that takes place. So I am leaning towards this. I am leaning towards the ABC pattern to get down to the downside here, right at that breakout, right at our daily expected move, right at the 95% line in the sand. We see this head down. People get very, very bearish. Then we see if it can curl back up. Right as everyone gets bearish at that 95% line, you're noticing that it turns out we get some pretty damn good reactions to that level. And the only thing we would have to be aware of is if these lows are taken out on the 2-hour chart. And ultimately, to see extreme bullishness, we're going to need to curl up this daily chart. I just wanted to say that real quick for the SPY. For the Qs, same type of scenario, right? And of course, once again, of course, you guys join, and I just totally forget to update the Qs on these lines. So we're going to update it right now. 427.69 to the downside, right? 427.69 to the downside for the Qs. And we do have a price point of about 464.67, right? 464.67 to the upside for your daily expected move upside, okay? So you notice that it has spread out pretty dramatically, so we can see some more rip around kind of behavior. And let's go into the 2-hour, right? Let's remind ourselves, well, if the 2-hour crosses down, that's not a good sign, but it would take you into a buy zone and outside of that 95% area, which means a rip from here is possible and very probable, actually, if we even make that downside move. But something to pay attention to is the fact that that would really lean me towards a bear market and this being some kind of lower high at this point. Now, that can change. It can always change based on more price action, but that's the overall assessment. The other thing that I would pay attention to is the fact that we got a wick down by that monthly expected move. This is good. So when we go into a 30-minute chart, if we're not going to start off to the downside, well, we might want to watch that upside move. So if we're going to head to the upside, what I'd be watching for is the 30-minute MACD to cross up into positive territory. Looks like we're already trying to do something like that with the price action and head to 464.67, watching out for the traps, right? Some kind of trap at the high would be an interesting thing for the Qs to do. If you want this to just be very bullish from the start of the day to the end of the day, well, you probably need to see a big gap up and you need to violate any kind of divergence that can form down here on your MACD and RSI at the same time, right? We don't want to see those things if you want this to head in the upward direction. So as of right now, if this is some kind of A, B, C pattern, you actually would notice that that would potentially take you through the daily expected move again. If we keep making these moves outside of daily expected moves, the implied volatility is going to continue to remain very, very elevated. We're seeing huge reactions from the VIX, which is causing more and more people to take more and more of those bets long, like a month out. So we will be going over to the VIX right now. Volatility, very, very nice. And we're going to do something different here with volatility. Now, notice one thing, it's right by the center line. That's a good sign, because if you're by that center line, you have a chance to take out this low and go make a new one and start that, lower high, right? Lower high, make the lower low, and we're in a downtrend. That would be a very, very good sign. We notice that the 30-minute has not crossed down yet, and we are still remaining above 40.80 at this point. So look for if that gets a reaction tomorrow. And the reaction tomorrow could be a big one, right? If the 2-hour was to cross up here, it would say I can take out all of this and head up to that 61.68. Now, that could actually be a trap to the downside, some kind of bottom, but that would take the SPY below those lows, and we do not want to see that. We will see if it shapes up that way. If we see it that way and we do cut through those lows and see something dramatic to the downside on the 2-hour and volatility scales up on the 2-hour very dramatically, okay, we're going to pay attention, because at that time, we're going to be saying, hey, we can still get a rip here, but a bear market looks like it is very much so on the table. We'll see if that holds water over time, but that's what we would have to read into. As of right now for volatility, the thing that you want to happen is the daily scale to cross down. The daily scale crossing down here would help it get down to a point where it can catch some kind of bounce at that 200. But once you lose that 200, that's when you can start to get down towards 1212, and people go from extremely bearish, maybe to extremely bullish very fast. And we will look for reversal signals there, because we do still see some risk in this market for 2025. So just be aware of that. But I wanted to do something different for you. Look at the 30-minute chart, and I want you to look at the volatility, right? So the volatility of volatility, though, is showing something interesting here. Curling down at the end of the day, just with this little blip here. I'm going to read more into it in the morning when we see more, but you do have some structure saying, hey, this wasn't as strong, right? We notice volatility really screamed higher, and so did the VVIX. But if the VVIX is able to cross through these levels, you see that we could really head down quickly with the volatility of volatility, meaning this means that volatility could actually subside over the next few, I would say even going into next week. If this started to trigger, we started to curl down bigger time frames and things like that, start to curl down daily charts and stuff like that, this would really make volatility subside over time. So this means to me, we could be very, very close to a bottom forming here, but we might have some more rip around behavior down here for a couple more days in order to figure that out. So I just wanted to bring that to your attention. The volatility of volatility is suggesting that we can head down, which means that VIX is going to see less of these big pops and big drops. So let's just pay attention to what's going on tomorrow, pay attention to our risk, and make sure we are trading like water, which means we have a plan for if it's going to go right? When we take a trade, we have a plan for it, and then we have a plan for if that plan goes wrong. There is something interesting, and we did give you this for Apple. Apple is an interesting risk to reward, as it is still hovering right below or at that 95% line in the sand. We gave you that live, right? 190.52 for your monthly expected move downside. So very interesting that you're still hanging out down here. Now, it makes sense that Apple is not seeing as much positivity, but we reacted to a great level, and then we scooped down. And then can we see that actually with this consolidative pullback here, can that actually produce to the upside? I know it's crazy to say, but according to your MACD, this 8.7% move down is still considered a pullback at this moment. Now, we want to understand that this can be used as a rejection zone now, and we could go test that breakout. But this is what I wanted to point out. A lot of stocks are testing into this high or going down towards their breakout areas. And I think that is very interesting, because if the big players missed out on this move, and we want to push the price down, right, to get those get out of those positions on the Friday expiration, I was always looking for the reaction after this week's expiration. I think it would be a very, very cool thing to see how stocks behave next week, but it's going to be very difficult to navigate in the, I would say, medium term. Short term, rip and roar, right? You're seeing rips up, rips down, and day traders are probably loving life. But these medium term traders, even like myself, are having to reposition, right? React very quickly, still reposition, react very quickly every single time we touch a weekly expected move, every single time we dip down to lower expected moves. So it's a very rip around kind of market. And now we need to see a resolution to this, I believe, in the next few trading sessions, because this is getting a little bit too scary for everyone. And we need to see a resolution to this. Apple's going to have some trouble, obviously, because of China and all that good stuff. China. But Apple is one. As far as risk to reward goes, it says, well, this says 95% chance to close the end of the month above this line. So if I see a move down early on for Apple, I can take into consideration risk to reward. And that's a very, very cool thing. But if you pull up Tesla, you're noticing the same thing. We're testing in these areas or trying to go to breakdown areas, and that's where we could end up. I really want to pay attention to anything down here. Where did that first big move happen, and where was that breakout? That's what I'll pay attention to the downside for tomorrow. That'd be very interesting. Now, if we do curl up, we're paying attention to the same things. Do we see 30-minute divergence? Because that can curl down a 2-hour chart. Now, there is one thing to discuss when it comes to squeeze and when it comes to possibly even good news or bad news, right? If we see a divergence and bad news comes, that means the momentum's weak and boom, to the downside. We're going to probably cross down that 2-hour chart for Tesla, right? It's not going to be a good thing. But if you actually do this, this is how a lot of squeezes actually start, is you see some kind of reversal signal and then it just gaps up and it ruins the signal. So just be aware of that. The more likely thing in this area is to still land inside the expected moves. And a lot of these stocks are now back in those or testing the bottom of those. Apple is still at the 95% one. So still the risk to reward at this point is to the upside, but there are risks to the downside. That is the scenario you are in. I'm sorry to say it. I wish this thing would clear up. We've been having to talk about both sides for about a whole month, maybe 2 months now. And we don't necessarily have those probabilities that are like, for sure, yes, this is heading up. For sure, yes, this is heading down. Most of this is very much so. You have to be very quick with it. And when momentum swings to the upside, it can be very quick to swing to the downside. So I'm sure day traders are loving it, but position traders might be a little bit hesitant, right? Having to switch those positions around. And that's exactly what I've done with Amazon. Amazon, I actually did happen to be a part of this upward move. I ended up being able to take out of that and then go down to deeper prices. And my thought here was just look for those moves, right? Look for these breakout areas. You can see these wicks. A lot of the time we're going to these wicks with that touch, and that's a great retest. But the options didn't really fluctuate horribly. I wouldn't say they fluctuated horribly. And that's very interesting to me because, even with implied volatility very high, you still would assume that those would fluctuate and you would see big bets in both ways and lose big percentages. But really, the positions aren't doing too bad. So if the 30-minute can curl up, we're watching for those trap-like signals, but we're also aware that on the daily scale, we've been beat up for a very long time. We're finally starting to see some positivity. Yes, we can see another flush, but it is still pretty damn likely that we are going to see some kind of move to the upside for a lot of these stocks. Even if it is downside first, we might see that rip and rally. Maybe it's even ripping past these type of levels and then we curl back down, right? So a lot of this will be dependent on the price action for tomorrow, and then we can update you in Saturday's video. So make sure you're subscribed. Now we're going to flip over to NVIDIA, and you're going to notice what are the 2 points to pay attention to. This level right here and the breakout from the big move. Where are we at right now for NVIDIA? Well, we are in that little block, right? We tested inside this little block here and we held up. That is a good sign for NVIDIA. I think I might have said Tesla, my bad. For NVIDIA, we are still in 30-minute pullback right now. This is not something that says, hey, I'm going to be the absolute worst. It can turn into the worst, right? It can turn into the worst if that 2-hour crosses down. But for now, it could just be some kind of ABC type of move that ends up going to that breakout area, and then we see that thing just curl back up into positive territory. So we will be watching this live with you tomorrow morning, but that's something I want you to be aware of. A lot of these stocks are testing in these blocks in here or looking like they want to go down to the breakout area, which is something you test a lot of the time. We talk about breakout and breakdown areas for tests a lot of the time. I really like those kinds of areas to look for bounces, so that's something to keep in mind. We will go over AMD because it's doing a similar thing, right? It's going into this block right now. We can see that block, we're going into it, and we're trying to get some support. Now, if AMD remains negative for too long, if the 2-hour starts to cross down, that's obviously bad, right? Always looking at the 2-hour as well. But this could be some kind of flagging at the moment to head for that next leg lower to go test that actual breakout area down towards 82.50 is what I will say. So be aware that that can happen. The main thing we don't want to happen is all of these lows taken out mainly in the indices. As we switch over to something like Meta saw some great positivity. And guess where it is? It's right back in this area, right? We are right back in that area. Potential for gap support even coming across, right? There's a lot of gaps that happen in this area, so it's probably a zone that we need to mark off. But for now, if this is some kind of flagging and we ABC down, that would lead you directly into what? The breakout area. You see how all of these things, this is what makes the market actually kind of nice right now. Everything is behaving the same, which is very, very cool. So if I see a confirmation before something else, let's say something confirms on a big move, and I see a stock that's related to that, but it also has not seen that big move yet, it means that that could be a potential opportunity. Things are moving very much so in tandem, and that's very interesting to me. As of right now, for something like Microsoft is overall saying this is not going to go lower. That's actually what Microsoft is saying. Now, I still think it has the opportunity to. You have extreme volatility here, but what did it overall do? Well, Microsoft's breakout area is a little bit different. It didn't necessarily see that big breakout time until right up in here, not down here at these wicks like the other ones. So this is actually going right into it. Now we can see another move down, but we also want to see if that can head all the way down to 361, 361.50. That would be the interesting level. But once again, if these things are just curling up, just watch for traps up here. Use those daily expected moves over on Patreon. This stuff can really help you out. But for the time being, you're in a rip around kind of market. So I just, always suggest, and this is what I do for myself, I lower those position sizes. I make sure to have some conviction with it. And then I'm always that skeptical guy with those positions because they're making money really, really fast, which means they can lose money really, really fast if they're shorter dated options. Just be aware of that. Google again, right? Google again, testing into the highs, right? Testing into this high up here. If it wanted to ABC to the downside, where would it go to? It would go to the breakout area, right? So pretty much for tomorrow, we should be paying attention to, do we see good support here? Do we see something crazy to the upside tomorrow, or do we see a trap? And then the other side of that would be to the bear side. Do we see it pull down to retest all of these breakout areas? And I think that's the main thing we need to be paying attention to when it comes to most of the stocks in the market right now. I did want to point out the memers do have some reversal signals in here, but the 30-minute has yet to cross, and it's not necessarily on the MACD and RSI at the same time. Seems to just be on the RSI, but this can cause a 2-hour to pull down. Now, something very interesting for me is these are the stocks holding up the best, right? AMC, GME, they're holding up really, really well. Now, GME did confirm a signal today suggesting, hey, we could see downside. We do have divergence on the MACD, kind of flat, and then we have a divergence on the RSI at the same time. So these are some things that are happening, but because this was such a strong move that held for a little bit longer, you're actually closer to you're not as close to that center line, meaning you're not as close to going negative. You're not as close to crossing this, which means we always can just see this thing figure its stuff out, retest its breakout area, and then turn back to the upside. If you want to see something absolutely crazy, I mean, if you want margin calls and stuff like that for GameStop, and as stocks are at lower levels, you want to close the day above 26.72, but you do have the recipe for success that you just gave up today. The 30-minute is crossed down. That is a no-no, right? We need that to curl back up. But the 2-hour is still crossed up. That's a check. The daily is still crossed up. That's a half check. Why is it a half check? Well, because it's still negative. We need that thing positive. The recipe for success for GME to see a good move to the upside is you have a 30-minute going up, right? Positive, crossed up in positive territory. You have a 2-hour crossed up in positive territory and a daily crossed up and in positive territory. This has a good likelihood to go positive. Why? Because you do have daily divergence, so just keep that in mind. So yeah, I was at the zoo for most of the day today, right? I'm not staring at stocks or anything like that. I was happy to come back and really I just took things as they went down towards breakout areas. I really did just look at these and go, yeah, they look pretty good down here. Okay, I'm going to put that money back to work because I think we're going to end up that way. I really do. Even if we end up this way first, I think at the end of the day, we're either going to see this and that, or we're going to see this and that. And either way, it's going to end with some kind of rally here. And that's just the truth of it. Most likely it will end in some kind of rally by the end of April. And that's just how it's going to go because that's what the probabilities are pointing towards. And that's what I like to do. I like to play those probabilities and I'll be right more than I'm wrong. And if I'm risk managed with my position size and not betting the house on things every single time, but just surviving the game and overall continuing to play the game to get those good percentage moves, well, then sometimes you get lucky and you get one of those 1% that really, really benefits you, and that's fantastic. And that's where you have decisions to be made. So I understand this is a rip around market. I understand it's very difficult to kind of navigate, but if we can really utilize these expected moves and understand the probabilities here, we can put ourselves in the best area for success at the end of the day, which is very, very nice. So if this 30-minute curls up, we could see something good, but if there's no really good news behind it, like China actually folding or coming to the table in some way, then that's going to be an issue, and we could just see this curl up and curl right back down. So we'll be paying attention to it. We'll be live tomorrow morning on YouTube and live in the afternoon on Rumble. This market has been very rip around kind of behavior. So if you're day trading, you're probably loving it. If you're kind of more a position style, you're probably like, how the heck do I position this thing? I'm having to reposition. And I think repositioning is a fine thing. And that's what I overall did over the last couple trading sessions. So that's fantastic. Thank you guys so much for joining me here today. I really do appreciate it. Thank you to my Patreon members. If you guys want to join over there, it's only $7 a month and you can have all the daily expected moves for all those stocks that we just covered and more. Okay. So daily expected moves are great for if you have that options expiration coming up very, very quickly. Thank you guys. Hope you have a good one. Peace out.